Welcome to the land of Tesla, where electric car prices are dropping more quickly than those predicted by Johnson industry experts. Investors and experts have been deeply divided over Tesla's price cuts, leaving many perplexed and unsure of the company's long-term strategy. In this video, we'll examine the reasons behind Tesla's recent price cuts, the impact they're having on the industry, and why this means that Tesla stock will no longer be accessible to the average investor in a surprisingly short period of time. Some people theorize that Tesla's price cuts are a reaction to increased competition, while others think they're part of a much larger strategy to capture a massive share of the electric vehicle market. Although I'm eager to discuss this further, let's first destroy that like and the button to subscribe. Investors and industry experts have been debating Tesla's recent price reductions extensively, with some conjecturing that they are a reaction to heightened competition in the electric vehicle market. Others in the industry contend that they are a part of a long-term plan to seize a sizable portion of the market, although a recent piece indicates that the latter is more accurate. Tesla's significant price reductions were a symptom of the company's long-term strategy to reach an astounding 20 million electric vehicle sales annually by 2030, not a quick reaction to competition. Due to its industrial scale and advanced manufacturing techniques, Tesla's management team is confident in their ability to achieve this ambitious target, and their dedication to cost leadership is the key to their success. Although Tesla can manufacture an electric vehicle at a lower cost than many of its rivals, affordability is crucial to achieving a sales volume of 20 million units annually. For this reason, Tesla is aggressively lowering prices not to compete with other manufacturers of electric vehicles, but to make their products more accessible to a wider audience. By doing this, they hope to establish themselves as the market leader in the electric vehicle space and to secure a sizable portion of the quickly expanding demand for environmentally friendly transportation options. Let's examine the current state of affairs at Tesla, based on registration data gathered and shared by Automotive News. Tesla has emerged as the leading luxury car brand in the U.S. With 491,000 registrations in the U.S. for 2022, this is the first time a U.S. automaker has held this position in 25 years. Tesla has surpassed Mercedes at 286,764 and BMW at 332,388. Tesla's factory ramping this year allowed them to easily enter this top spot with over 100,000 more vehicles registered than their closest competitor, although Tesla's demand has been a source of concern for some recent price increases. Lexus, Audi, Cadillac, Acura, and Volvo follow after this noteworthy accomplishment. People were both encouraged and concerned by the cuts at the end of the previous quarter. While consumers awaited information about the upcoming tax credit, Tesla was offering discounts of up to $7,500, which were primarily perceived as an attempt to clear inventory. When the tax credit details were released, the Model Y was no longer eligible, but Tesla began reducing prices in China. Tesla abruptly reduced pricing at the start of January, bringing them down to the equivalent of $7,000. As a result, the Model 3 RWD, their cheapest car in China, dropped from 13.54 to 229,900 RMB, or 33,417.16 USD. Additionally, the model year-over-year fell to 13.41, which is similar to 45,118.37 in China. Even though some changes, like the option for a round steering wheel, may seem minor, they demonstrate that Tesla is paying attention to its customers and meeting their needs at the same time. It is evident that Tesla is constantly innovating and taking calculated steps to maintain its position as a leader in the automotive industry. It will be interesting to watch what further steps Tesla makes in the future, given their recent success in becoming the leading luxury auto brand in the US and their capacity to reduce prices when necessary, which demonstrate that they're always seeking for ways to stay out of the game. The Model 3 RWD, Model 3 long-range, Model 3 performance price reductions are notable, but the most startling decrease is for the Model Y, where Tesla reduced the price by $20 from $65,990 to $52,990. For $45,490, the base Model Y that was previously ineligible for a tax credit is now offered. While some people believe that Tesla is having trouble meeting demand and needs to lower prices, others think that the company has a plan behind this move. This change is a huge win and has made the Model Y more affordable than ever. Additionally, Tesla has lowered the prices of the Model S and Model X, with a Model S Plaid being the lowest priced car we've seen from Tesla. Tesla's been able to bring down production costs, and by passing these savings down to the purchase price, these will make more sales, therefore lowering the price of their vehicles was part of the strategy they knew they couldn't keep selling or growing. Number of Model Es each quarter at $66,000. In the end, Tesla's decision to drop prices is a mix of addressing a demand issue and executing their business plan. While these price drops are good news for potential Tesla buyers, those who recently purchased the Tesla feel like they've received a significant slap in the face. It's important to note that the price drop means that many more people can now afford to buy a Tesla, which is a great thing for the future of EVs. One of the reasons for the price drops is that most trims did not qualify for the tax credit, which is why Teslas decided to lower their prices. Although this is a great move for the company, it's frustrating for those who recently purchased the Tesla, and it makes their car significantly less valuable. Despite this, the long-term effects of the price drop were positive, since more people can now afford a Tesla. Cheaper EVs are what we want, and that is the ultimate goal. I find myself wondering why Tesla didn't cut prices gradually rather than all at once. Doing so would have satisfied their customers and possibly increased the company's profits. Although this move is not perfect, it's important to keep in mind that Tesla has always operated in a very dynamic and unpredictable environment where anything can change at any time. It's fantastic that Tesla is making EVs more affordable for the average person, and it will be interesting to see how this will affect the company in the future, despite the short-term frustrations. The sudden price drop is unusual, but it does mean that Tesla can finally undercut the competition, making their vehicles a more viable option for more people. What does this signify for investors, given that this move represents a major advancement for Tesla and the future of EVs? Tesla's price reductions, which emphasize affordability and cost leadership, are actually encouraging for the company's long-term prospects. If Tesla is successful in snagging a sizable portion of the electric vehicle market, you stand to benefit from your investment. Some experts believe that Tesla will sell 20 million electric cars annually by 2030, which leads them to set the company's target price at $310.61. Although this may sound like a big objective, it's important to remember that Tesla has already made great strides in the right direction. In 2022, they sold over 1 million electric cars, a figure that is predicted to rise sharply in the years to follow. Tesla's latest price reductions are a direct message to the electric vehicle industry and the company's leadership. The market does not react to competition by emphasizing cost leadership and affordability. To sum up the most recent information on Tesla's aggressive pricing strategy, the firm has positioned itself for long-term success, which might result in significant returns for investors in the future. Although investors and industry experts have been talking a lot about cuts, it's evident that Tesla has a long-term plan in mind by putting affordability and cost leadership first. With their recent success in becoming the leading luxury auto brand in the US, it is evident that Tesla is well on their way to reaching their goals with consistent innovation and strategic moves. It will be interesting to see what Tesla has in store for the future of the auto industry. What do you think of this recent move with Tesla? Tesla hopes to sell an astounding 20 million electric vehicles annually by 2030. Please share your thoughts in the space provided below. And don't forget to hit the subscribe button and give this video a huge thumbs up. We appreciate your time, and we'll see you in the upcoming video.